program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello, this is the Global View on this Thursday at AusBiz. Thanks for joining us again. Let's get across what we're seeing on global equity markets and investor sentiment, improving on Wall Street on better than expected private payroll numbers and potentially the prospect of an end to the government shutdown. A broad rally sent all three major US equity indices higher, with a bounce back in tech and tech-related momentum stocks leading the charge there. Among those mega cap tech stocks, we did see Alphabet boosted after the US Justice Department antitrust review cleared its $32 billion takeover of cybersecurity company Wiz. Advanced Micro Devices shares rose to a record high as it forecast fourth quarter revenue above estimates, driven by strong AI chip demand and data center expansion. However, super and microcomputer shares tumbled after missed quarterly estimates due to delayed graphics processing unit deliveries. Elsewhere, McDonald's gained after the fast food chain beat same-store sale estimates as affordable meal offers boosted demand. Match Group's fourth quarter revenue forecasted land just shy of expectations, yet the Tinder parent shares did jump. Amgen gained in the wake of the drug maker's profit beat, and Bank of America slipped, even though the lender raised its profitability target. Health insurer Humana fell after reported third quarter results, while Johnson Controls shares surged on stronger than expected 2026 profit. And US listed shares of BHP and Rio rose, with copper prices gaining after 4 sessions of declines. And in Europe, German carmaker BMW's core profit margin rose in the third quarter as it passed the peak in research and development spending on its EV range. Well, the world should watch out for 3 possible bubbles in financial markets. The head of the World Economic Forum has warned. Borja Brand has said we could possibly see bubbles moving forward. One is a crypto bubble, second an AI bubble, and the third would be a debt bubble. He pointed out that governments had not been so heavily indebted since the end of the Second World War. Well, the US services sector activity increased to an 8-month high in October as new orders grew solidly, but subdued employment pointed to lackluster labour market conditions. That's according to the Institute for Supply Management survey. And the ADP private payrolls report showed employment rebounded by 42,000 jobs in the US in October after declining by 29,000 the previous month. US Treasury yields rose following that jobs report, while a Treasury refunding announcement indicated potential future increases in long-dated debt issuance. The US 2-year Treasury yield rising to 3.63%, the 10-year is close to 4.16%. The US dollar index was little changed on the day. The Aussie dollar has pushed back above 65 US cents. Oil prices have fallen more than 1% to a 2-week low. However, data showed signs of strong US demand for fuel. Brent crude futures down 1.5% at $63 a barrel. Copper rose more than 0.5%. Iron ore little changed at 103 US a tonne. And gold has reversed some of its recent losses. Spot gold up around 1.3% at $3,980 an ounce. And Bitcoin rebounding to trade just over 103,000 US dollars. All right, let's take a look at what we're seeing on US markets. Ira Epstein joining us from Linden Associates. Ira, very good to catch up with you as we do on a weekly basis. Let's first take a look at some of the read we're getting on the US economy at the moment. We've got that ISM survey, also the jobs report, private payrolls. What did you make of them?
Well, first, thanks for having me. Second, the ADP payroll was the event of the day. That is what everybody was looking to see. And we did see that 40,000 plus jobs increase, and they did modify somewhat the losses that we saw in September and August. So that all helped the market. The ISM numbers haven't been bad. They've been okay. But there's a lot going on under the scenes that we have to pay attention to. First, the U.S. consumer has pulled back even from going to McDonald's and other smaller size chains with their purchases of food. They're eating home more. They're taking to the office. They're taking lunches. They're not buying as many Starbucks and Brothers coffee as they were in the past before that. The other thing we have right in front of us was today in front of the Supreme Court. The Trump administration argued its case as to why it was proper for the president to go ahead with his tariffs. The way the questions came in to him from the different sitting judges, justices, as we like to call them here, I didn't like them in the terms that I thought that they were against the Trump administration more than for them. So we will see where this all comes out, but they don't give you a date when they're going to make a decision. We are hoping it's before the end of the year. What would happen if the tariffs were declared in many cases illegal is that the Trump administration would jump through some loopholes and find another way to make them stick. However, it would be a mess. It would probably be initially a market decline. It would probably set the interest rates sharply higher initially, might drop the dollar a bit on fear of what it all means, but people in the end always run to the dollar for the safe haven. As for the gold market, that might be an interesting story because gold's lacking a story now. On the way up, as you and I were talking week after week, and I started just over the 4,000 level saying, now people are talking 4,500, 5,000, 6,000, 10,000. That's the sign of a bubble. And that's exactly what happened. The market fell back 10%. The same thing happened to a degree in cryptos. We saw the 128,000 level drop down under 99,000 just recently. So if you're looking at these markets to just hold together well, that's not really the case. The stock market is an AI market. If you're trying to make money on other things, I wish you the best. I'm not saying you can't, but it's very difficult to do so. It seems that you wake up in the morning and you hear there's another X billion-dollar deal between Nvidia or OpenAI or Amazon or one of these other companies. But if you're really not in those companies and you're watching what your portfolio is doing, more stocks are down than up if you take a look at the 50-week moving average of closes. And that's a bit of a problem.
Well, and you only have to look at that narrow leadership, obviously, with those mega cap tech stocks. Ira, what have you seen from those most recent results? But also, I guess, is the market waiting on the big one, Nvidia, which comes in a couple of weeks?
Right. It's always after the fact. It'll be a good number. What good is defined by the market will be remaining to be seen. No matter what it is, the market will always say it can do better, but everybody's using NVIDIA, and NVIDIA's got new chips even behind this coming out, so I don't really see the big problem. If you're a market technician, and I strongly suggest you take a look, each time you've gone up to the upper Bollinger Band, it's an algorithm designed by a gentleman called John Bollinger, and you go to his website and learn about it. The market backs off 3 to 15%, and then the market gives you an opportunity into it, and the market seems to come back each time and make a new high. Until that pattern is broken, I think NVIDIA is the kingpin of everything. I was just watching before you had me on that you were talking about a gentleman that's warning about an AI bubble, that's warning about a debt bubble. He couldn't be more correct. There will be one, it will happen, it inevitably happens. Picking it's near impossible. If you're early, you miss out on just what's happening, that the market overall, and the word is overall, seems to me flat to making gains, and that's what you're looking at. But looking at the interest rate stay at 4.16% in a 10-year note does not spell well for mortgages dropping and getting the mortgage companies to start lending money and new housing going on. So right now, I think that we're coming into the end of a year where the market normally does, and I want to use that word in quotes, does normally look upon the marketplace favorably. There's a lot of window dressing. The caveat could be the Supreme Court decision on Trump and what that means. And you cannot forget that. It's too early to think they're going to come out tomorrow or next week with the decision, but it is probably going to be sooner rather than later overall.
And Ira, ever since the US government shutdown began, I think I've asked you every week, is there any effect been seen on markets at the moment? Is there any response there? Obviously, this is the longest in history. You're about to enter holiday season. If it goes on, obviously there'll be a severe impact there. Interestingly, I saw also that Donald Trump blaming the shutdown essentially on the poor result for Republicans in those most recent elections.
Well, actually, the Republicans and the Democrats and the independents should all get a set of mirrors, look at it, and spit at themselves. They've all made themselves fools. They're not getting anything done in the government. Nobody's going to win on this leg of the shutdown. The Democrats are not going to get the health care parts that they need. They should reopen and negotiate and get it. The Republicans cannot live and win an election if healthcare costs in America double or triple. That's just the reality of the situation. But trying to force them to do this right now and say that the Democrats won when they did have a big win in New York City, they won in Virginia, they won in New Jersey. So there's people that are giving the Democrats a chance. Does anybody win by the shutdown? No. Does it make trading difficult? It makes it near impossible. We're guessing, and the word is guessing, as to what the economy is actually doing. You're looking at the ADP reports. You're going to look at the Challenger Gray report for the corporate numbers. You're going to look at ISM, S&P numbers. Nothing wrong with all those. In fact, they're great to have. The problem is that they're not the government numbers we need, and we need much more of them. What's the jobless rate going to be? How many jobless claims are coming in? Your guess is as good as the man on the moon. No one knows. So what we're all doing right now is we're more frustrated in looking at the charts for our direction. There's nothing wrong with that, but we like to have some fundamentals backing up what we think there, and we're just not getting that at this point in time.
All right, great getting across what you're seeing in markets. Thanks for joining us, Winner Associates.
Thanks for having me.
So let's focus then on what's ahead on this Thursday. SPY futures pointing to a very strong start on the local market, up 0.75%. And we'll get across all of that in just a couple of minutes' time. Join us.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.